Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip.
What's going on, guys? How we doing? We're back. Another week. Last week we had John Mason with Swing Juice. That was a great conversation. What do you guys think?
Oh yeah, that was awesome hearing his story, and I'm so excited just to see where it goes too. I think that there's still so much potential there, and
Yeah.
I got my mind working as he was saying stuff. I was like, oh man, and you can do this and this. So
No, I think it could have been like a 2-hour show. We might have to have him back, but
yeah, just got
That
my
was-
hat in the mail, my hat and my T-shirt too the other day. So
nice. Should throw it on.
in the car. But
Yeah, it's cool stuff. Really cool. What I loved about the show was like how much it is like it's a journey, right? And it's compounding growth as an entrepreneur. Like you just every day, there's this quote: "You can't fail if you don't quit." And
yeah, I mean the pivot that he made, right?
yeah, incredible.
Sitting there, staring himself in the mirror, being like, I'm not going to be able to compete in this area. To
Yeah.
now, pivoting his business, like I say, like what these companies will do. You think about this as like a small brand, right, in the grand scheme of things, but what these major public companies will do, right, in order to, all right, this is how the market, you know what I mean? What's going on? We need to pivot here. This is going to,
Yeah,
translate into revenue and then into higher earnings and things like that. It might be something that was completely different from what, they had been doing not too long ago, and why that maybe a stock that might have been cast aside and said, hey, there's nothing to this company. They make this change and all of a sudden could lead to 10 to 20 years of shareholder growth.
yeah, no, absolutely. I think it was that he made the point on the show. If you have not heard this show, go back, listen to it last week. But he was like, hey, overnight success could be 20 years of work.
Yep.
When you hear these overnight success stories. So I think that's important. The other thing, Eric, I don't know what you thought about this, but it seemed every time he started, so when he started the beverage, Swing Juice, and then he started the apparel, he went to market fast with a small amount of capital.
Oh, yeah. And he made his decisions quick. His decision to even switch, he realized it was too difficult in the drink industry and then switched to retail clothing. But, I mean, when you're a small brand and you're working out of your basement to start, you can make that change pretty quickly.
Yeah.
But
so I think
was
it's really
mostly-
cool.
I was mostly impressed that he's able to move from one business to an entirely different one.
Yeah.
Which, the marketing and branding was similar or the same, but he had to
Same
learn
community.
an entirely new business very quickly.
Yeah, no, for sure. And after that conversation, I might have been inspired, but I took Ethan for the first time golfing that weekend.
Nice.
We played 9 at a very public course.
What did
Ponkapog.
Ethan do?
Dude, it took us 3 hours to do 9 holes. It was amazing.
Yeah. Hey, you got to get
You're
out
just
there.
tired from hitting so many balls, right?
Yeah, that's the thing. We just did a lot of breakfast balls and like a lot of yep, take another one. We're going to take another one. So it was like driving range combined with, there was no one behind us. It was great. It was a very great place to learn.
It is a great initial introduction to golf course, right? It's
Yeah.
cheap. You're
No,
dealing with the elements out there. And
Yeah. Benz, if you haven't been, the greens are, it's like off-roading for
well
golf.
kept.
Yes.
Yeah.
It's wild.
It's not as bad as Leo J. Martin in Weston, which is known as honest to God the worst course in the country. You think of Weston, and it's probably one of the wealthiest towns in Massachusetts, if
Yep.
not like in
The country, the whole country. Yeah.
And it has the worst public golf course in the country. It's insane.
It's actually perfect.
It's like the dive bar of golf courses.
Yeah,
You
Ponkapog
go
is
there
probably
because
not. Actually, Ponkapog at times can be at least all right. You're not paying a ton, so it's like.
I actually think there's great value for what you're getting at
Yeah.
Pocketpug. Yeah. All right, so maybe we'll have to do a Swing Juice Fox Hill Wealth golf tournament in the spring. I think that could be cool. Yeah, make a comment if you guys want to come. It's going to be awesome. So this week, let's get into it. This week, we are going to go in the secrets of IRAs, Roth IRAs, and the game-changing Backdoor Roth strategy I want you guys to educate everybody on, because I think we take it for granted, but a lot of people listening have no idea this is even possible, especially for our high earners out there. There's big opportunity in retirement savings and tax efficient retirement savings. So that's the key. We're also weighing in on this week's financial news and portfolio holding that's been in the news lately. So let's get into it. Eric, you want to take us? What's going on this week? It was a bumpy week. The S&P started out a little shaky and...
Yeah, well, I feel like it was every other day I was looking and nuclear stocks were down 10%, then up 10% the next day. A lot of volatility in the tech sector as well. And that's, once again, related to uncertainty surrounding government shutdown, all kinds of things, and what the future looks like. But
is that all? Why are you guys freaking out? Like our clients? How are clients reacting? Is it just because it's again tariff talks with China?
Yeah, that's what we chalk it up to. We've had some clients call in asking questions. Maybe they're getting near retirement. They're like, hey, do I need to take some risk off the table? We firmly believe once this stuff gets squared away, the market will be back chugging along.
Just like we did earlier this year.
Yeah.
Yeah.
Okay. Exactly.
Yeah, especially with so much of this being driven from companies that are making money. This is not being financed, right? In a sense, a lot of this is being pulled up from earnings from very solid companies. So the clouds dissipate, right? In the morning sun, things will look bright. Hopefully be maybe not clear ceiling ahead, but there'll be some winds at our back, you know?
Right.
Yeah. So you're saying the fundamentals are still strong. We're looking long term. It's good. Yeah. Okay.
Yeah. And if you're invested in, we'll say, in companies that are making money and have like relatively normal valuations, you're not going to be in this bubble that's coming. There are certain stocks that are valued very highly, very richly right now. So just make sure you're in the good companies.
Yeah, not those meme stocks. We'll get into that later.
Did you guys hear about mortgage rates? They hit their lowest point in over a year. So the 30-year fixed mortgage rates dropped to 6.19, lowest since October 24.
Yeah.
So, go ahead, Justin.
No, keep going. I was going to say, I
New
can't
study shows
believe.
borrowers can save 0.55% on the rate by shopping different lenders. So over time, that's potentially thousands in savings, right?
Yeah.
I'm sure most people have their mortgage person and they got their relationship. That's who you end up going with. You gotta ask questions when you're making a big financial decision like getting a mortgage.
Yeah.
Yeah, I think this is big for a lot of people. A lot of people have home equity lines of credit out right now. And so they're seeing their month, if they were just paying interest only, they're seeing that payment drop considerably. So that's helpful. They're able to use some of that savings to help pay down debt and then help pay for their regular expenses that they have each month. So that's a big thing, I think, and a lot of relief for a lot of middle America, we'll say.
Yeah. I was talking to a realtor because I was asking, hey, if interest rates go down, mortgage rates go down, is that going to help home affordability? She was of the opinion that home prices would actually climb up as rates come down. So she did not believe it would end up helping people with home affordability.
Why? Just because there's so much pent up demand behind that?
Yeah, exactly. A lot of people sitting on the sidelines because they're looking at that monthly payment. They're like, oh, I can't afford this monthly payment. But guess what? There's a bunch of other people sitting there saying the same exact thing. Once the rates come down, now there's more buyers in the market, push up the prices of the homes.
You're talking New England, though. I think regionally it's going to be vary by region to region, right? Like where they've overbuilt, like I think Florida's still affordability coming there, getting there more and more. I would imagine parts of Texas, same. I think we just haven't built many homes up here, right?
Yeah, I think there's definitely a lot of factors. I mean, that from a very basic economic standpoint, that point that realtor made might be true, but at the same time, I think more people will enter the market in terms of selling their home as it comes down, which will also put some supply into the market, because I know a lot of people who are like, geez, I'd really love to downgrade, but my mortgage payment is only X. And if I were to, maybe I could sell, but I might have to get a small mortgage. It's not like I could just pay for a townhouse or a condo or a smaller home right in cash. Yeah. And my payment would actually go up maybe, potentially a little bit with the rates being 3.125, something like that. I do think that, and it's not with inflation, with everything else, I don't know if there's going to be that many more people entering the home buying just based off of rates going down. I think they would still have to go down considerably for a lot more people to enter into the home buying equation.
Yeah. The other thing I think I just want to highlight is, and I was talking to a realtor recently, and he brought it to my attention. So there are other products out there. So it's not just a 30-year fixed that you can, if you believe, if you're someone, and you guys can squash this right away if you think this is bad financial advice, but if you believe that rates are going to go down, like a product like a 5/1 ARM where it's adjustable, you're getting a 5 point, I just Googled it real quick. It's a 5.5%. Maybe that's lower depending on your bank. That could be a good product if you're looking to buy a house right now, just to get a short-term lower rate and then refinance as if you believe rates are going down. What do you guys think about that?
Yeah, it's great, but it's just risk that a lot of people necessarily can't take. They can't.
It is risky, but if
That's the only thing. So it can blow up in your face. But if you do believe that, rates are going down, or you're going to sell the house maybe in 5 years, you don't plan on living there forever, it's a great option for you. But keep in mind, if rates go up, if your value of your house goes down, you might not be able to refinance. So, I mean, there's some things that go into it you have to think about. So it's not just, I'm going to be paying less. This is a great deal. There's definite some variables that can put you in a bad position.
Yeah.
It is a bet in a sense. It could be a calculated, decision,
100%.
but it is definitely not. There's things that you need to be thinking about for sure.
Yeah, that's why I wanted to put that out there. I knew you would provide real rationale there. I think it's important. Yeah, it's important for people to understand exactly the products they're getting into. All right, so we got the government shutdown too.
And I will say, I remember when I locked in my mortgage, I had mortgage brokers being like, you should look at the 5/1 ARM right now. And I think to myself, why would I do that when, rates are at where they're at and I'm holding this long term? And yet they were still kind of pushing it in my ear. And I'm like, this is a property I'm gonna own forever, because when I move out, I'm gonna rent it out. And I was still getting that talk, you know what I mean? So just
So are their commissions higher with that, or they just firmly believe they had insight as to where interest rates were going?
Have any insight on it?
Yeah, they don't.
I know. But
they're a broker. They only get paid if the loan gets done. My thing is, hey, they give you the carrot of maybe you'll save a little bit of money, but at the same time, they're looking. It's almost like future business for them, right? They know that you're going to refinance.
Oh, they know you're going to refinance in 5 years.
That's my only. Why I'm skeptical of stuff like that.
Yeah, because my mortgage person was pushing one of those ARM loans as well, and I just, because our home was at the higher end of our range, I was like, I'm just going to get it fixed because I don't know what's going to happen.
Definitely.
I was going to say Fed,
and it's a
Fed rate cut expectations.
It's also a home that you plan on living in, right?
Oh, go ahead, Bill. Sorry.
No, I was just saying it's a home that you plan on living in, raising your family in. It's not like you're looking to jump ship in 5 years from now.
Right.
Yeah. And if rates go down 1%, I'll refinance then. Exactly.
Yep.
Fed rate cut expectations build. So 100% probability of a 25-point basis cut at the Fed's next meeting, which is just in a few days.
Next week.
And that same thing we've been talking about. Government shutdown created data delays the past few weeks. So key economic reports that are coming out, CPI, inflation data, that faces potential delays, and that creates a ton of uncertainty in the market. Big projects paused, government employees not getting paid, workers getting furloughed, food stamps cut. So we're expecting
Just
CPI.
ridiculous. The food stamps are getting cut.
Yeah.
No, that's a big one. And it's affecting a lot of people right now. Governors are declaring national, state emergencies because of this. So I imagine we're getting to the end of the government shutdown because it can't keep going. People are going to get pretty pissed off, right? Yeah, I think there's a lot of pressure being applied to these politicians. They've got to work something out.
When people aren't getting paid, then things start to matter. Yeah.
Well, yeah, you've had that. They brought enough people, they unfurloughed enough employees to get CPI data out today. So that's going to come out today. They're expecting 3.1%. it's there, but thousands of other government employees have been furloughed, and big projects are being paused. I read yesterday, just here in Massachusetts, the Cape Cod Bridge was on the docket to be rebuilt, and they're pausing that project because they don't have the money. It's locked up.
This is the Bourne or the Sagamore or which?
Yeah, one of them. I don't know. It's causing big. I've been following this article because it's.
I think Bourne, because Sagamore a couple of years ago or not too long ago, had a bunch of work done on it. So.
Yeah, it's an interesting article news. It's unrelated to this show, but it's going to affect a lot of people who are living because they basically are using eminent domain to buy out all these homes where they have to build a new bridge because they can't shut the bridge down. So they have to build one in tandem next to it. So it's crazy. Yeah, I mean, and then you have jobs. Jobs are down. So I think that's what's pushing the Fed. The 100% Fed rate cut coming up is major. It's jobs.
Yeah, because it's not inflation.
Right.
Because inflation is higher than they want it to be, but the jobs are not, you know what I mean, doing worse. They keep revising these things downward too.
Yeah.
So,
and at the same time, they've stopped or reduced. I think they're stopping it, the quantitative tightening. At the same time that you're dropping rates, the Fed is also, they're going to start spending more. They're going to start pumping more money into the more quantitative easing, which is interesting. What do you guys think about these meme stocks? Beyond Meat, Beyond Meat, is this a buy? Bill, what do you think? Beyond Meat just surged this week 446%.
That's right. So
everyone's talking about it. Is this a buy? Do we follow meme stocks?
Your 1 year rate of return on Beyond Meat is negative 20.67%. The S&P 500 is up about 14. Tread carefully, folks. Yeah, no, you can make some money in some of these things, and there's always a stock that's popping. But you want to take on that type of risk to potentially gain that much money or potentially lose a very
just gambling.
Your portfolio? Is it a great company? I don't necessarily know. I don't think they're profitable. Maybe they will be with some of the recent deals. And obviously, they just signed up with Walmart and things along those lines. I don't know.
I put it in the notes because I think our thesis is always long-term equities and stocks that have solid foundations, solid principles, just like economic data behind it, right? They're doing real things, right, Eric? And so while these meme stocks make the news, it's really something we want to discourage people from chasing. Would you add anything?
And we want to reiterate that we don't chase them either. We have a very disciplined investment philosophy, and it's not based on what company had high trade volume today. And we're not getting in and out of stuff like that. I don't know, company that's basically a food company up 400% in a day. Krispy Kreme, a donut company, up 40%. Like in pre-market, nah. We're not touching that.
It's funny, I haven't seen too many Krispy Kremes. Wasn't that a big, I remember back in, I don't know, 20 years ago, I feel like they were expanding rapidly and then.
They probably got crushed by Dunkin'. That's definitely what happened.
Yeah, they made a big splash, and then it hasn't done well.
I don't think it was pressed by Dunkin'. Dunkin's been around for a little bit, but Dunkin' Donuts has been around for.
All right, so other news: gold is with the big headlines. I know that ripped and then it fell down. So I think a lot of people are taking profits. It's still moving forward. What do you guys? Anything there? Do we think? What are we thinking about gold? Is it indicating something, or is it just big countries making moves?
This is just gold is a tough one to follow. I mean, right now, with the U.S. continuing to have debt issues and things like that. Again, this is something that can be corrected though, and if that does happen, gold will retreat heavily. So that's one thing just to be careful of as you're investing in gold. We've obviously seen a record run, but like any asset, there's going to be pullbacks at certain times. The only thing with this, will it continue to go up once this pullback happens? That's a tough call. So
No, I think it is. And I was thinking about how we make our trades and decide when a stock is ready to sell. We talked about that the other day, that meeting, Bill. How do you know a stock is too high or if it's got further legs to keep going, keep running?
I think
we look at a lot of different indicators. Gold's going to be tough.
because that gold case, in order to sell, I think that's where you say, hey, I'm going to have a percentage of my portfolio as part of it. And
Yep.
once that percentage goes out of whack, that's when you'd make a sale
Okay.
into gold.
Okay.
That's how I would rationally make a decision there.
Treat it
Because you
as a
can't say, like,
rebalancing.
oh, what's gold's earnings? It doesn't
Got
have
it.
earnings. It's just a precious metal. It's a speculative metal. You have to think of it more as, all right, I'm comfortable with having this much money in gold as an inflation hedge. And if it goes out of that percentage, okay, so say you're like, I want 5%, I want 10%. If you're Ray Dalio, right, you're saying you should have how much, Justin? You tell me.
Yeah, he's saying I think it's 15% right now. It may
So
have gone
if
up.
it goes from 15 to 27% of your portfolio,
Yeah.
you want to make a sale there, right? You don't want to be going that high because it does have very big pullbacks. It does have years of trading flat, right? And things like that. So
Yeah.
you don't want to have too much money in that where it ends up being detrimental to your portfolio. At the same time, yeah, you can take advantage of times like these. So
What's interesting with the price so high is that recently people are panning for gold again. I don't know if you guys have started doing that in your backyards, but no. So that is like a funny sideline story on that. But anyway, you guys, let's get into the main topic.
a little dust, and I came away with 47 cents. It was good.
It is wild. So the reason why I wanted to talk about IRAs, and everyone's got a retirement account. When most people, when they're working for a company, there's a 401k benefit. They're putting that money in, and then when they leave that company, they have the chance to roll it over into an IRA. So there's also what the Roth IRA is, a different vehicle. You're using pre-tax or post-tax dollars rather to put it in, and there are limits on that. So I wanted to get into this and explain this for everybody listening. Can you guys Eric, can you go over the basics of not just the IRA versus the Roth? I think I just covered, and please fill in if I missed anything there, but also like the limits on that, contribution limits and everything as of today.
All right, let me rattle them off. So this is for 2025.
Yeah.
IRA contribution limits. You can put in 7,000.
So before we even get into that, sorry,
Yeah.
I just want to just discuss so an IRA, okay, it's the acronym for an individual retirement account, right? So when you have money at a 401k, it's held in custody and administered by someone related to that company, okay? So a company will hire a custodian where they will hold those funds, right? And they have to do the certain compliance and things like that for that plan to be, but they are holding it in custody for you, right? So the difference between that and then when you get an IRA or an individual retirement account is it comes over under your name, right? So now you are the administrator on the account. And that's why it's very important, right? If you need money from it, you don't have to answer to anyone, right? You just go to your custodian and do what you need to do. If you want to make changes, you do what you need to do. When it's held at that 401k, 403b, 457 plan, whatever it might be, right? You're subject to their rules, their investments, all those things. In an IRA or individual retirement account, you make the rules. It's your investments. You have a whole universe of different things that you can invest in. That's not the case there. It's very important, and I would very much stress this to all people. When you leave a job, roll that money over into an IRA.
Yeah.
Okay, so that you are now in control. You are not subject to what they're doing. If there's a large cap fund or whatever it might be, or ETF or index, they might not be offering it. In the IRA, you will be able to get that. Okay, so it's very important to do that. I have clients who say, oh, I want to just keep it there, something like that. And I cannot stress enough why you want to get out of that. I hear people say, it's doing okay. That is it's a relative term and it has nothing to do with that custodian. It's the underlying investments. to say something's doing okay, it's like, all right, relative to what?
Yeah.
Oh, look, there's another investment that is very similar, okay, may even be able to be a little less risky, but get you more return that you have access to in your IRA. You don't have access to it at that custodian. Not necessarily anyway. So that's just an important thing that I just wanted to mention. And with that, in a Roth IRA, traditional IRA, it's only registration of how the taxes work, okay? So an individual IRA is either pre-tax money, gross tax deferred, is taxable when you take it out, okay, at ordinary income rates.
Right.
A Roth IRA is post-tax money put in, grows tax deferred, and will be tax-free when you take it out, as long as you meet certain criteria, such as being 59 and a half years old or having the Roth IRA open for over 5 years. Excuse me, it has to be open for at least 5 years, and you have to be over 59 and a half, excuse me. So
Have both.
that's
Can
one
you-
thing I just wanted to just
Yeah.
specify before we even get into things like that.
And then, Bill, if I have a Roth IRA and I take some of the money out prior to being 59 and a half, and maybe it's been open, is that still tax free?
So you can take out your basis of what you put into it,
Okay.
right? So let's say you put
So
in
not the increases.
5,000 a year. Yeah,
Yep.
let's say you put in 5,000 a year for 6 years, and your Roth IRA is worth $70,000. But you're like, I need money. You can take out that 30 grand
Without penalty.
without penalty
Okay, cool. Got it.
and leave in that other $45,000 worth of earnings, right?
Yep. Just growing tax free.
That will continue to grow tax deferred and tax free. That 30,000 you can then access.
Got it. Cool. No, that's I think that's really important for people to understand. And what you said earlier about the 401k being left in the company's
Their
under their
administration.
custody. Yeah, I was going to say purview, but that wasn't the word. But under their custody, it's about control at the bottom line, like having that
100%.
flexibility and control. And it's amazing how many people we talk to, they're like, yeah, we have accounts all over the place. It's like a trail. It's like a trail of 401ks that left behind.
Yeah, then you ask them, what are you invested in? They're like, look at you. I have no idea. Let's gain control of this asset, right? And make sure it's working for you in the right manner, you know?
And consolidate all those. Say you're like the standard, I don't know about you guys, and there's definitely a stat we could probably pull somewhere, but so many people are at jobs every year, every 2 years. They're hopping around, job skipping, because you can leverage, you can make more money.
Yeah,
supposedly.
move your way up the corporate ladder, right?
Yeah.
Yep.
But no one talks about this kind of trail. This is like cookie trail of 401ks left behind. So that's great. It's good to know.
It makes for a big mess if something ever happens to you, because
Yeah.
hard for everyone to gather all assets. Like, were beneficiaries assigned to each 401k that you had, or hey, I need to access money in a pinch.
Yeah.
It's a lot harder to work with those 401k administrators than, hey, just having it in your IRA, you can pull that money out instantly.
Yeah. But yeah, let's get into it, Eric. Let's get
That's
into
key.
the contribution limits, phase outs, all the
Yeah.
things.
Can I put unlimited amount of money in the Roth? It sounds sweet.
So the issue is, there's contribution limits for IRAs, right? 7,000 for those under 50. Hey, if you're 50 or older, you have that catch up. You can do 8,000 into your IRA. The issue with Roth, though, is there's income limits. For a single filer, 150 to 165K. For married filed jointly, 236 to 246,000 is your limit.
Meaning, wait,
Like
so
20?
hold on. Meaning, if I'm making more than that, I can't contribute to a Roth?
You cannot contribute. So keep in mind too, there's contributions and rollovers. Rollovers are completely different, right? So if you have money in a 401k plan,
That's where we're
you
getting.
can roll over $7 million, $12 million if it's in a 401k, if you happen to have that much.
Yeah.
There's no limits on rollovers. Contributions are new funds. So when you think, okay, when I take money and take it from my checking account, I want to put it into an investment, that's a contribution in that year. So that's
Okay.
very different. And what
Okay.
it is that there is your adjusted gross income, okay? So that phase out. So at 150,000, right? And let's say you're under 50 years old, you can put in 7,000 up to $7,000, right?
Yeah.
It phases out between 150 and 165, right? So at 157,500, for example, you can't put in the 7,000, you can only put in 3,500. Okay. And it phases out as you get up to 165, right? Same thing with merit filing joint, right? Or if let's say you're over 50, right, it's an $8,000 contribution. So
Okay.
that's something to think about. And it's all hinges on your adjusted gross income.
What's the workaround, Bill? What do you do if you make too much money? How do you get money into a Roth IRA?
Yeah. So if you're making more than 200, Eric, you just said 246,000. Is that right?
Yeah.
As a married filing
It's a
jointly.
full phase out. Yep, that is a full phase out number.
So you can't contribute to the Roth, but a Roth is fantastic because it's taking money I've already paid taxes on, and then it's going to grow. So especially if I'm young, I'm imagining, right? Like this is a fantastic product. If I'm young and I've got 50 years of growth ahead of me, it's just going to grow tax-free.
Yeah. No,
That's
it
awesome.
can be great. So there's a couple options. One, you want to check with your 401k provider. Do they have a Roth element to it, right? So if they have a Roth element to the 401k or 403b or 457 plan, whatever you might be utilizing, you can contribute post-tax on that. Okay, then you're subject to those qualified plans, which are 23,500 for people under 50, and then 31,000 for people over 50 due to the catch-up provision, right?
So that's a 401k limit.
That's a that's a
Wait, hold on. You're saying
we're going to call them qualified plans, okay? So this is like a work-sponsored plan.
But you're saying that there's sometimes in those work-sponsored plans, the 401ks, there's a Roth option.
There is a Roth element.
Oh, wow. Okay.
So you don't get the tax deduction up front. A lot of times people, they put in that 20,000 because it saves them 5,000 in taxes. For example.
But can't I also I can set up any time a Roth on the side. I don't have to go through my work.
But that's a IRA, right? That's the individual retirement account. And you can do it, and there's a kind of a workaround. So years ago, they used to have an income limit when you could do this conversion, right? They have since taken away that income limit. Okay, so there's no income limit currently, and you can do what's called a backdoor Roth IRA conversion. Okay, now there's things that you need to be thinking about with it. Okay, so that if you do not have any IRA money, for example, right, what you can do is you can contribute to the IRA, the traditional IRA. There is no income limit, right, in which you can contribute.
Okay.
There's a deductibility portion, but we're not going to get into that right now. But you can contribute. So you could make $30 million a year if you can contribute to an IRA. But you won't get a tax deduction, right? So you put it in, so it's essentially post-tax money, and then you immediately convert it to the Roth IRA.
Okay. Got it.
All right. And now once you've done that conversion, now the thing is, because it's post-tax money going into the individual IRA, it is then pushed right over and there's no taxes on that conversion. Okay. The caveat though is that you have to think about is if you do have any IRA money, there's what's called a pro rata rule. So with that, let's say for example you have $100,000 in an IRA already, okay, and you contribute 7,000 into the IRA looking to do this backdoor conversion. The problem with that is you're going to only get the percentage of post-tax money put in. That's the only portion that's going to convert tax-free. Okay, so if you put in 7,000, you already have $100,000 in there. Only 7% of that $7,000 conversion is going to come over tax-free. The rest of it will be a taxable event.
Okay.
So that's something you need to be aware of.
When you're planning with clients on conversions, are there better times to do conversions than others? I guess outside of the backdoor Roth.
Down market, great time to do it. right?
Okay.
We don't want to do it
No
at the peak of the market.
year where you're out of work or make less money.
Ooh.
That's,
Yeah.
Because the taxable event is going to be, because my tax bracket's already going to be lower. That's what you're saying, Eric.
Exactly.
Yep.
Yep.
Okay.
Like I was speaking with a client just the other day, going to be leaving her job in January, right? But they have a bunch of cash saved up. So what we're considering doing is in that year of retirement, we're actually going to do a conversion because their taxable income is going to be very low that year. And so what we're going to do is we're going to convert a bunch of money so that they pay very little tax upon the conversion. And then that will grow tax-free for them.
Got it.
Going forward.
Yeah, that makes sense. That's cool. And then all right, so there's a lot of ways. The backdoor Roth, that sounds great. Are there bigger ways you can do this? If I'm making...
Oh, and one thing I wanted, this is kind of like for a self-employed person tip.
Yeah.
One thing that you can do if you're self-employed, so let's say you have no employees, and one way to get around the pro rata rule is that you could open up something called like a solo K, okay, which is really like a 401k for an individual, either individual and then their spouse, right? If you do that, you take the IRA, you do a rollover, tax-free rollover, okay? Now it's not in an IRA. And now you can start doing those backdoor
Oh, okay.
Roth conversions because now you're not subject to the pro rata rules. So that's something for all the self-employed people out there to really consider. And that's a great way to get around that because some people say, oh, I have all this money in an IRA, right? I was working for a corporate company for a long time. I had a match with a 401k with a match or profit sharing, and I have all this money in it. And now I got $200,000, I got $500,000, I got $1 million in this plan, and now I can't convert.
Yeah.
Right. I can't do the backdoor conversion. That's killing me. But it's like, all right, the way around it is let's roll that into a solo K, and now you're not subject to the pro rata rules, which is nice. So if you're self-employed, that's an option, right? That's something.
If you're self-employed and you're living below your means and you're making a lot of money in your business.
Yeah, no, but I'm just saying you're making money and you're
That's
looking
right.
ways to convert.
As you're talking, I'm listening. Like it goes back to these basics that we talk about all the time. Live below your means. Have money to put away and compound and do all these things.
Yeah.
So, that's great. What about? I heard there's a mega backdoor Roth. Is
Mega
that?
huge.
Yeah, huge. Eric? Is there truth to this? Do we know, Bill, Eric? Because it just allows for this is for like high earners.
yeah. So your regular
Huge
401k
savers.
contributions.
Huge
are capped.
savers.
So regular 401k, you're capped at that 23,500, like we talked about below age 50.
Yeah.
Total annual contribution of 70,000 is allowed. So for the mega backdoor, your 401k's got to allow after-tax contributions.
Okay.
And it's got to have the allow for Roth conversions in the plan or in-service distributions.
Basically, what you do is you can put in up to the 23.5, right? For example, so you put in the 23,500.
Yep.
You can do that either pre-tax or post-tax money, right? So you can do that either traditional or Roth. But then what it does is you can still put in these after-tax contributions, okay, into the plan, right? So you can, which then that's where you're subject to that 70,000
Okay.
difference, right?
Yep.
That money, okay, because it's after tax, can then be converted that can be then converted to a Roth IRA,
Okay.
right? So if your plan allows you to put the money in, you have the ability, first of all, to do it. You put the money in, after tax contribution, you've already done, you've maxed out your plan. You can then convert the remaining that if they allow what's called in-service withdrawals or distributions.
Okay.
That allow that conversion to take place. So it's a way in which you can put another, right, 40 some odd $1,000, right, into a Roth IRA. Yeah.
Wow. Okay. I can't help but say it sounds like the goal is to always get into the Roth, whether you're converting or I guess there's moments where people have just too much money and they can't pay the tax burden of converting the IRA to a Roth IRA. But
in some cases,
am I right?
I mean, it's really nice to have tax-free money, right?
Yeah.
Tax-free growth. It's almost like a checking account. You take it, you're not paying tax every time you pull it out. You're paying 32, 35, 37% on your money. And in retirement, maybe you're only going to be paying 20% on your money.
Yeah.
Right? Or something like that. Is it nice to take a tax deduction now, let that grow tax deferred, and then when you go to take it out, you're paying 10, 15, 20% less you are? So there's aspects of both that provide you with some advantages.
Yeah. So it's really important to talk to you guys and get see the whole plan.
Right.
Yeah.
All the strategy come together.
I'm in favor of actually having a little bit of both, to be honest with you, because we're a progressive tax system. So as, you know what I mean, the more earnings you have, the more your percentage of tax is higher. But if you can keep yourself in those lower brackets
by contributing to the IRA, you're saying?
Not even I'm talking about during the distribution phase, actually. So
sure.
Out, right?
Yep.
If you can take some money out of your some money out of the traditional bucket, right? Some money out of the Roth, it gets you to the sum you need, but you're actually going to have more expendable dollars. Whereas if you were just getting it out of traditional, you'd have to take a lot more out, right? Because you'd have to gross it up for taxes. So that's the thing, right? So if we can keep you under certain tax brackets, you got to remember too, for a lot of people, you hit certain numbers, all of a sudden your Medicare costs go up, right? There's what's called IRMA, or income related monthly adjustment, right? So if you have a ton of money coming out of traditional IRA that's subject to ordinary income tax will go up, right, in value. Whereas if you have some money coming, and that's on your adjusted gross income, but your Roth IRA doesn't affect that, so you can keep it down, and that's a way to keep your taxable income down. So those are things you need to be thinking about. Okay,
cool. So just to wrap up, as our listeners are listening, what are their action steps? They can go talk to their employer. They can make sure the 401k, there's a Roth component to it. Maybe look at past employment 401ks and try to get that consolidated. Any other things that they should be doing right now to move forward with this? Bill, what do you suggest?
Run a financial plan. Run a financial plan.
Yeah, run it by someone who can review all these things and go over it. Let them know about all the tax implications and other implications and financial implications that go along with having these out there. They can speak with the administrator of your plan with you so that you're making sure that you're making all the correct decisions and doing everything correctly. And they can do that within conjunction of what you have going on individually, not just what's going on with the company, right? So you make sure that everything is being done in the most tax efficient and best way possible, right, for your situation. So,
okay, solid. All right, let's move on to the last piece of the show. We've got Netflix has been in the news for a bunch of reasons, but recently it took a 10% hit. This is one of our holdings. Is it time to get out? Are we scrambling? What's going on behind the scenes? Eric, you're talking to tons of clients. Anyone called in, worried? What's happening?
Actually, no one called in, at least that I heard of, on Netflix, even though it was down 10% in one day. It's one of our holdings. The big news was, hey, they hit their revenue number, 11.5 billion, but the issue was their earnings per share was actually down. It was reported at 5.87 per share. The consensus had been 6.9 per share. So that's actually a big difference. The main culprit was a 619 million tax hit. So that was a one-time dispute with Brazilian tax authorities covering tax on cross-border transactions and royalties. Netflix said it's one time. You can see from the 10% price drop, that definitely spooked investors. Because if it was truly just a one-time thing, I don't think it would have moved 10% in one day. So we'll see what happens going forward. A lot of people had been excited from some of the content they had released. K-pop Demon Hunters was huge recently. And they've
Stranger
continued
Things
to add,
is back, I think.
Stranger Things, yeah, their subscriber growth has been on point. So it's this.
They don't
political
release
risk and
subscriber
uncertainty.
numbers anymore, but the numbers. But
Yeah,
no, I personally think the stock has had a huge run up. It's up almost 50% in the past year. Year to date, it's still well above the market, good 10, 12% above the S&P 500. I think it's going to continue to grow. It's a holding that I have personally. We have it as a firm. This was something that was known too, that was going to be coming out. So it shouldn't be quite the buzzkill that it was, but it is what it is. But they feel that they've got everything under control with the government going forward, and there should be no unexpected surprises going forward with this tax issue.
Okay.
The other streamers are still so far behind. Like when you go in, anecdotally, I was using Disney Plus the other day. The app is just counterintuitive. It's hard to find the shows you want. You like Netflix, the way they curate their main dashboard.
My kids seem to be finding this stuff okay, so I don't know what your problem is.
Yeah.
A 6-year-old can get in and out of that thing in 2 seconds, whatever she wants. So I don't know. That might be saying something about you, Eric.
Maybe it's an old person problem then, right?
Eric's like the buttons.
I think it's also, these subscriptions are incredibly sticky. I even I've told you guys this, I try to cancel them every so often where I feel like that we're not using them. Of course, just the other day I'd canceled and they were like, wait, what? And then immediately, we lasted one day, bought back into it. So.
Yeah. No, but advertising revenues, right? They're making a ton of money on those lower tiered advertising revenues and things like that. And K-pop Demon Hunters.
Oh my God! Don't even talk to me about that.
Wagon.
If I hear golden one more time, I'm gonna go crazy.
gotta be golden.
Oh please! Oh, now it's in my head. All right. So overall, we're not concerned with the pullback. Strong fundamentals. We like it.
Yeah.
Oh yeah.
Again, this is for entertainment purposes only.
That can change.
This is not investment advice. Yeah. All right. All right. Cool. That does it for this week. Great show. I think that was great. Overall, we've got Backdoor Roth. We talked about the mega Backdoor Roth. We talked about the risk that you're running by leaving your 401k scattered throughout over the past 5-6 jobs. I think it's important to talk to a financial professional, get all your accounts in order, consolidate them, get real strategy behind it, and make sure tax efficiency is happening at all times. These are legit tax planning strategies. They're not conspiracy loopholes and crazy things like that. It is real. This is real stuff that you should be listening to and really take it for real.
Bill, what's the deadline for a backdoor Roth conversion? Does it need to be done by year
So the
end?
conversion for that year has to be done in 12/31. Okay, but there's
running out.
You can contribute. So that's the year you're going to be taxed on it, right? If there's any tax, if you do it on 12/31, it's going to be taxed in that tax year. But you can contribute to, let's say, for example, you look back the previous year and you go, oh, it's April 15th. You can put money into a traditional IRA for the previous year.
Yeah.
Okay. And then you can immediately convert it, right? It's just that the conversion takes place that year. What happens is the traditional IRA's basis goes up, right? And then it gets converted right away. So it's washes it right out, growing tax-free for you. And you can imagine if you have a big chunk of money that's growing tax-free and you're getting some, whatever it is in interest and capital gains and dividends, and you're able to just take that money out tax-free, how powerful that can be for you in retirement.
It's huge. It's huge. All right, guys, thanks for tuning in. If you found any value in this, make sure you share it with a friend who would need to listen to this as well. That's how we're growing this show week after week. We're up thousands of subscribers. Definitely want you to share it with a friend. And thanks for listening. We'll see you guys next Friday.
All right. Do good. Be good. Bye.